Now, question number 2. Asset purchased for rupees 1 lakh, 50, 2 lakhs on 3 different dates. When are purchased? 1/1/22. Asset purchased for rupees 1 lakh, and on 1/10/23 we have purchased another asset for rupees 50,000. On 1/1/24 we purchased another asset for rupees 2 lakhs. On 1st October 23, the asset purchased on 1/1/22 was sold for 70,000. 1st October 23. The asset purchased on 1/1/22 sold. This plus symbol represents purchase and minus symbol represents sales. Like this one on this date sold for 70,000. The rate of depreciation of the above asset being 10% under SLM method. So we have to follow SLM method of depreciation where the rate of depreciation being 10%. Prepare asset account under different methods of accounting for the treatment of depreciation. Different methods. One of the methods being charging the depreciation directly to the asset account. The another method may be accumulated in the provision for depreciation one. So these two models we can follow. Sometimes the asset may be sold through asset disposal account. I skip that for in this illustration. So you can try it yourself. Now, year end is assumed to be on 31st December. On 31st December. Let's see. First year starts on 1/1/22, ends on 31st March 22, 31st December 22. Okay, again it starts and ends on 31st December 23, and then ends on 31st December 24. Okay, we may prepare up to 4 years, like 3 years, like year 1, year 2, year 3. So that as per the information we have been given, on this date we purchased for 1 lakh, and 1/10/23 we purchased another asset for rupees 50. This asset sold for 70. Okay, on this date we purchased one new asset, sold the original asset purchased on 1/1/22, and 1/1/24 the next day of this one we purchased another asset for 2 lakhs. Now we have to incorporate all this detail in our illustration. Okay, so I just marked down the major transactions here. Now I can pass the entries here one after one. On this date, we'll start with this date, first date, 1/1/22. 1/1/22. We purchased an asset for rupees 1 lakh. So method of depreciation being SLM, and then the rate applicable in this case being 10%. We start with 1/1/22. On the date we purchased the first asset. So year 2022. For this, on the day 1 we purchased one asset. So purchases of asset account debit to depreciation, sorry, to bank. The amount paid here being 1 lakh. In the year end, up to this date, we don't have any other transaction. By the year end, usually we have to calculate the depreciation. So directly go for the year end, 31st December 22. You have to calculate the depreciation for the asset. The entry in this case being depreciation account debit to asset account. So we have 1 lakh rupees worth asset. The rate of depreciation applicable in this illustration being 10%, that to under straight line method. So applicable depreciation in this case being 10,000. As the year end comes, all the nominal account will be transferable to the P&L account. So the depreciation should be transferable to the P&L account. So P&L account debit to depreciation. To depreciation. This value being 10,000. December 31st. The next year, 11023 we purchased one more asset. 11023. Now we move on to the next year, 2023. We have passed the entry for 2022. Now we have to pass the entry for 2023. In 2023, on 1st October, we have to pass the entry here. Okay. Here, one of the assets sold. One of the assets sold, one of the assets purchased. Purchase is no problem. It's simply asset account debit. Asset account debit to bank. To bank. Okay. The value being 50,000. Now, in case of any asset sold, you have to calculate depreciation up to the date first, WDV, and then profit and loss. Okay. So, you have to calculate the depreciation for the year. Okay. Depreciation for the year. Depreciation for the year of sale. And you have to find out the WDV as on the date of sale. And then you have to find out the profit and loss on the date of sale. These are the 3 points you have to prepare or find out. Okay, whenever there is a sale, you have to do this. Okay, so let me finish up this first of all. So, depreciation, year of sale, WDV, and profit and loss. These are the 3 things should always be calculated when you are planning to sell. When you are planning to sell. Is that clear? I am going to solve this illustration. I am going to solve this illustration. So, this asset was sold now. You can prepare a working note here. 1122. The original value being 1 lakh minus for the year 2022 we have calculated the depreciation at the rate of 10%, 10,000 rupees. 90,000 is nothing but WDV in the year beginning of this 1/1/23. This asset is sold for which date? 110. So up to 110/23 you have to calculate the depreciation. So the depreciation in this case being on this value you have to calculate. On this value you have to calculate. Okay. On this value 10% being 10,000 rupees. But from this date to this date we have used only for how many months? 9 months. 1st January to 1st October we have only 9 months. Now we have to calculate for 9 months into 9/12. So 1 lakh into 10%, 10,000 into 9/12, 7,500 is the depreciation. Now the WDV as on the date of sale being 82,500 and sale value here being 70,000 rupees. Is that okay? Whenever any asset purchased earlier planned to be sold in the halfway through, you have to find out what is the depreciation in the year of sale. Second, what is the WDV at the time of sale. Third will be what is the sale value. Based on the sale value, you can decide easily what is the profit and loss on this sale. So now you have a loss here. How much? 12,500 being your loss. Loss on sale. So we have found out the depreciation for the year of sale, WDV and profit and loss. Now pass the entry for what? This one. Depreciation for the year of sale. What is the entry? Depreciation account debit to asset account. To asset account. This value being 7,500. Year of sale, we had a depreciation of rupees 7,500. Is that clear? This 7,500 is the depreciation for the year of sale. For the year of sale. Clear? What about this 10,000, sir? This 10,000 was already charged. So in this year, we have to charge another 7,500 we charged. Then we have to now sell the asset and find out the profit and loss also. So sale, bank account debit Okay, bank account debit to asset account. Asset account is 80 to 500. Asset account being 80 to 500. Amount recovered being 70,000 rupees. Amount recovered being 70,000. So because of this one, we face loss on sale. Account debit, which is 12,500. Clear? Hope now you'll be able to understand this one. Now we'll move on to the year end, the last date. One purchase happened, one sale happened. When it is it's a sale. Find out the depreciation for the year of sale. For the year of sale, from the date of beginning of the year to the date of sale. Beginning of the year being 1st January, date of sale being 1st October. For this 9 months is there, so you have to find out the depreciation for the 9 months. So we calculated that. Now we have to find out the WDV, or the value appears in the book, which is called WDV value or book value as on the date of sale, and compare with the sale value and find out whether there is any profit or loss. So here we have the loss. We pass the entry. In case of loss on sale, it is debited as loss. In case of profit, it should be credited. Loss debited, profit credited. Now, next one. We have to go for the year end, 31st December. 31st December 2023. You have to calculate the depreciation for the assets now we have. Okay, depreciation account debit to asset. To asset. How many assets now we have? In the year beginning, we have one asset. Halfway through, we purchase another asset. On the same date, the original asset was sold. So now we have only one asset, that too newly purchased one. The newly purchased asset being this one, right? For that 50,000 rupees, you have to calculate depreciation at the rate of 10% provided. This new asset purchased on which date? 1st October. As it was purchased in 1st October up to 31st March, 3 months only will be there, right? So you have to provide the depreciation for the period of usage, only 3 months. October 1st means October, November, December. So only 3 months in, depreciation will be calculated. For the 3 months, it is 1,250 rupees. Once the year end comes, all the accumulated depreciation will be transferable to the depreciation is transferable to the P&L account. Come on, tell me what's the value here. So P&L account debit to depreciation. Come on, tell me what's the value? 8,000, 8,750. 8,750 for this year 2023. For the year 2023, what is the total depreciation for the year? First machine used for 9 months. For that, we have already calculated depreciation 7,500. Thereafter, another asset purchase. For that assets up to the year end, we calculated depreciation 1,050. Overall depreciation for the year being 8,750 is not required to be transferred to the P&L. Clear? Clear? We have calculated the depreciation separately. One newly purchased assets from the date of purchase to the year end. One of the assets sold for that year beginning to the date of sale we have calculated. Both will be transferable to the P&L account. Sir, can I transfer this depreciation to the P&L account immediately? Sir, not required, because we prepare the trading and P&L account only once in a year, that to year end. So all the nominal accounts are grouped and the entire nominal accounts transferable to the P&L account only in the year end. Yeah, of course, as per the corporate requirement, they have to prepare once in every 3 months, quarterly report. That time, again, you can transfer all these things quarterly once to the P&L account. Here we assume the accounts are closed once in every year, so all the nominal accounts are going to be transferable to the P&L account only once in a year. Now this year is over, Now we'll go for the last year. So in the last year, 1124, we purchased one more asset. For rupees 2 lakhs. Right. So on purchase of the new asset account debit to bank. Third asset purchase, the value being 2 lakhs. No other transaction happened in this period, so automatically go to the last date of the year. Last date of the year, 31st December 24. Last date, you have to again calculate the depreciation of on the assets you hold. So depreciation account debit to asset. How many assets we have? We have this asset as well as this asset. We have 2 assets. Both the assets used for the entire year. Okay. 150,000 worth asset, another 200,000 rupees worth asset. Both the assets used for the full year. This 50,000 worth asset purchased prior year, in that year 3 months used, in this year fully used. This 200 rupees newly purchased asset, purchased on 1st January 2024 itself. from the 1st January 2024 to the year end, we have full year. So you have to calculate depreciation for these two fully for the full year at the rate of 10%. Then this value being 25,000 rupees. Is that clear? And year end comes, automatically the depreciation no more required to be transferable to the P&L account. So P&L account debit to depreciation. This value being 25,000. Clear? Hope now you'll be able to understand. Okay. This is the information. This is also working note. Clear? So these are very, very important ones. Clear? Now I will just post that into the ledger. I'll post that to the ledger. Okay. I'll post that to the ledger. Yeah. Now I'll open asset account and depreciation account if I need. And I can open the P&L account extract. Complete cannot be open, so only extract. Balance sheet extract. Balance sheet extract. Clear? I'll now start posting that asset to bank on which date 11/22 to bank. For making the presentation simpler, I just skipped posting the values here. Means date of transaction is not recorded. 1 lakh first year. And depreciation to asset. Value being 10,000. In asset depreciation, the value being 10,000. In P&L account depreciation 10,000. In depreciation P&L account. Oh, I posted wrongly. Yeah. Here asset 10,000. Here P&L account 10,000. Depreciation got total. And P&L account extract is also over. On telling this 1 lakh. 1 lakh. The balance what you have here is 90,000. So balance carried down. Balance brought down 90,000. This balance appears in the balance sheet asset 90,000. This is for the year 1. Let's now move on to the year 2. In year 2, we purchase one more asset, bank 50, and depreciation to asset 7,500. In asset by depreciation 7,500. In bank, of course, not required. Loss can be transferable to the P&L account. Loss on sale 12,500. In asset bank 70,000. Loss reduces the value of the asset. Loss on sale 12,500. Here is for depreciation to asset, the value being 1,250. In asset depreciation, so first depreciation is for the first asset, second depreciation is a newly purchased asset. Okay, 1,250. And in P&L account depreciation, this value being 8,750. In depreciation by P&L account 8,750. On tallying this, depreciation account is closed, P&L account extract is closed. Now I have to close the asset account 1,40,000 rupees, 1,40,000 rupees, and here balance carried on being 48,750. You no need to use a calculator. You have only one asset left with. For that one asset for the current year 1,050 is subtracted. So from the 50,000, 1,050 is subtracted, then naturally 48,750. And try to find out whether this answer is matching here. Else you have made a mistake. Clear? This become opening for the next period. Opening for the next year. Balance in the beginning of the next year 48,750. You are getting this right? And last year asset, in asset to bank we purchased one more asset for rupees 2 lakhs, for rupees 2 lakhs. Bank of course not required. And in depreciation to asset the value being 25,000. And in asset by depreciation 25,000. This 25,000 is for both the asset newly purchased as well as asset continued from the earlier year. And in P&L account depreciation 25,000, and in depreciation P&L account 25,000. Depreciation is a nominal account. For the year end it becomes 0. Now if I tally this, whatever the balance I get, 2,48,750, 2,48,750, and what is the final value? 2,23,750 is the balance. That balance goes to the balance sheet. And the second year asset balance being 48,750. The last third year asset balance being 2,23,750. Clear? Hope now you will be able to understand. Always remember, if any asset sold in any of the year, three things you have to calculate. One is depreciation in the year of sale to the date of sale, up to the date of sale. Second one is you have to find out the WDV of the assets. It's nothing but the original value of the purchase minus all the depreciation since the day of purchase to the date of sale should be subtracted to find out the WDV. Third one is find out the profit and loss on sale. This WDV is compared with the sale value to find out whether there is any profit or loss. Clear? Yes, come on, make a note of it. So I'll now solve this illustration under provision for depreciation model. Okay, I start with this one. These are the information. Provision for depreciation model. In the year beginning 1/1/22, asset purchased for 1 lakh. Asset account debit to bank. Value being 1 lakh. In the year end, we are supposed to create the depreciation. That depreciation is transferable to provision for depreciation account, the other model. Depreciation account debit to provision for depreciation. Usually what we do, depreciation will be adjusted in the assets account, but in case of provision for depreciation model, all the accumulated depreciations are shown in the provision for depreciation account at the rate of 10%, 10,000 rupees. SLM method, rate of depreciation being 10%. And whatever the depreciation we have in the year end not required to be maintained, transferable to the P&L account. So here P&L account debit to depreciation. This value being 10,000. Let's move on to the next year. In the year 2023, 110/23, 110 be calculated. To find out the depreciation in the year of sale, you better start with 1/1/22 original value. For that, the previous year depreciation for the year 2022, at the rate of 10% on this being 10,000, 90,000 being 1123 WDV. In this 2023 year, on 11023, the asset sold. So we have to find out the depreciation up to the date of sale. On this 10,000 at the rate 1 lakh, 10% for 9 months from this date to this date, 1123 to date of sale 11023. 9 months is there, so we have to calculate the depreciation for the 9 months. So for the 9 months, the value being 7,500. 82,500 is the WDV as on the date of sale. On the date, the sale value being 70. 82,500 rupees worth asset sold for 70, then we face a loss of 12,500 rupees. Now we have to incorporate all these things. Number 1, depreciation. Depreciation for the year end. Depreciation account debit, and the depreciation should be transferable to the provision for depreciation account. The value being 7,500. Number 2, sale entry. Sale entry. You collect the money, so bank account debit to asset account. What is the value of the asset? I am going to record here. Come on, tell me. What is the value of the asset? What is the asset value? What is the value of the asset in the journal entry? 1 lakh. Original value under provision model. The depreciation is accumulated in the provision for depreciation, so asset account will always be shown at its own original value. The sold assets accumulated depreciation available in the provision for depreciation is now transferred. So provision for depreciation. Provision for depreciation account. How much provision is there? So 20 plus 7,500, 17,500 will be the provision for depreciation. Clear? And sold for how much? 70,000 rupees. Because of the sales, we face a loss of 12,500. So loss on sale. 12,500. Verify whether debit is tallying with the credit side. Yeah, it's tallying. Now go for the year end. 31st December 23. 31st December 23. We can provide the depreciation for the new asset. The journal entry being, I'll post that here. So, in the year end, 31st December 23, depreciation account debit to provision for depreciation. Now we have only one new asset. Purchased at 50, that too purchased on 1st October. This one, 1st October. From the 1st October, 31st December, we have 3 months. You have to calculate the depreciation for the 3 months at the rate of 10%. Okay. Then this value being 1,250. Once we come to the year end, all the nominal accounts should be transferable to the P&L account debit side. Further, the journal entry being P&L account debit, the value being this much. So 2 depreciation. We have 2 depreciation here, 7,500 and 1,250. Overall depreciation being 8,750. 8,750. 8,750. P&L account debit to depreciation. Clear? Apart from that, this loss can also be transferable to the P&L account. Usually we don't do so, but you can do this one also, right? In case of profit, that should be credited in the P&L account. In the case of loss, it should be debited to the P&L account. You can pass the entry for this one also, of course not required. Then the value being 21,250. So in the previous case, here you can add that one also, this loss on sale. Loss on sale. If you post this value, then this becomes 21,250. Any of these two is shown here. Is that okay? So you can directly name here being the P&L account or loss, and then the loss is transferable. That way also you can show. That way also you can show. Then we'll move on to the next year. On 1/1/24, in the very beginning of the next year, we purchased one more asset for 2 lakhs. The entry being bank account debit. Sorry, asset account debit to bank account. Sorry. Asset account debit to bank account. This value being asset account debit to bank account, the value being 2 lakhs. 2 lakhs. Is that clear? Asset account debit to bank account. This one is over. For the year end, we have to calculate the depreciation for both the assets. So depreciation account debit to that depreciation is transferable to the provision for depreciation account. The overall value being 200,000. One more asset 50,000. So we have two assets. For the two assets, we have to calculate 10% rate of depreciation for the whole year 25,000. And the year end, the depreciation will be transferable to the P&L account. So P&L account debit to depreciation. The overall depreciation for this year being 25,000 transferred to the P&L account. Now we can prepare the ledgers. Clear? Now, ledger preparations. Now, ledger preparations. We'll start with asset and provision for depreciation. Here, P&L account extract, balance sheet. Very first year, in asset to bank, the value being 1 lakh. Bank account, we never bother about that. A number of transactions possible. In depreciation, to provision for depreciation. Okay. So, of course, you can open the depreciation account also, but actually not required. Anyhow, I'll just open that depreciation account. And P&L account extract, balance sheet. In depreciation, to provision for depreciation, 10,000. Okay. In provision for depreciation, 10,000. In P&L account, depreciation 10,000. In depreciation by P&L account 10,000. After this, depreciation account is closed, P&L extract is closed. If I tally, the value I have in asset account being the same original value without any change. Balance carry on. That becomes balance in the next period. And provision account also will have the balance here. Provision account will also have the balance here. Balance. In your balance sheet, asset account being 100,000 minus provision for depreciation 10,000. Now it becomes 90. First year is over. If I move on to the next year, in asset to bank, we purchase one more asset for rupees 50,000. And in depreciation to provision, the value being 7,500. In provision for depreciation by depreciation, the value being 7,500. Forget about the bank. In provision for depreciation to assets, any asset sold, the accumulated depreciation on that available in provision is transferred from provision to asset account on sale. So here asset, the value being 17,500. That 17,500 represents the depreciation on the asset sold since the date of purchase to the date of sale. Here provision for depreciation. This value being 17,500. Loss on sale. Here loss on sale 12,500. In asset I have posted these two. That loss is again neutralized here by transferring to the P&L account. I don't open the loss on sale account. In the asset we get the collection also, the bank. The value being 70,000 rupees. Okay. We don't open the loss and sale account. If you want to open the loss and sale account, you can open the loss and sale account also. So here, to asset 12,500. That's how you can open. Provision account posted, loss posted. In asset, we have posted the 3 here. And depreciation here. Depreciation here, to provision. The value being 1,250. In provision account, by depreciation 1,250. In P&L account, okay, we have the depreciation 8,750. Loss on sale 12,500. In depreciation by P&L account 8,750. This is closed. In loss on sale, here P&L account 12,500. Transfer here loss on sale. Loss on sale. So this account is closed. This account. That's why we usually don't worry about the loss on sale account. If you want to pass a journal entry, pass as usual profit or loss and then transfer to the P&L account. Else you will understand easily where it will go and you can post that directly, no problem. So now I close this books of account. Here 1,50,000. Under provision model, the balance will always be at its own original cost. We have only one asset, the original cost of that asset being 50. And on tallying this, the accumulated depreciation asset sold can be found out 18,750, 18,750, balance carried on. That balance carried on is nothing but accumulated depreciation on the asset available with us. Okay, for the 50, this 1,050 is the accumulated depreciation. So this becomes the next side as the opening balance. Here, balance in the next year being 50. While showing the balance sheet asset, value being 50 minus provision for depreciation being 1,250. So 48,750 is the ultimate value after the provision. Now we'll move on to the last year. In the last year, in asset to bank, the value being 2 lakhs. Forget about the bank. In depreciation, to provision. So bank is not required because it will have n number of other transactions. We are not aware about that. So we are dealing with only depreciation and asset. So we never bother about the asset account to be open here. Here to provision for depreciation being 25,000. In provision, depreciation in the credit side 25,000. And in P&L account, depreciation 25,000 in the third year. In depreciation by P&L account 25,000. Now if I tally, the final balance being the same 2.5 lakhs. 2.5 lakhs. Balance carried on. 2.5 lakhs. If I tally this, the balance being 26,250. 26,250. Balance carried on here being 26,250. Here asset being 250 minus provision being 26.250. The ultimate value being 2,23,750. Is that clear? Hope now you will be able to understand the provisions model also. We don't have one asset. In this illustration, we have 3 assets. In between, one of the assets sold and new asset purchased. Okay, comprising all these items, this will be the basic illustrations like we have completed. Come on, make note of it.